The thing about AI for business, it may not automatically fit the way your business works. At IBM, we've seen this firsthand. But by embedding AI across HR, IT, and procurement processes, we've reduced costs by millions, slashed repetitive tasks, and freed thousands of hours for strategic work. Now we're helping companies get smarter by putting AI where it actually pays off, deep in the work that moves the business. Let's create smarter business. IBM.
When you're running a business, the best days are the ones where priorities stay on track. For midsize and large companies, that isn't always easy. Risk can touch multiple parts of an organization at the same time, often in ways that aren't immediately obvious. It might involve property, liability, or cyber. It could stem from regulatory requirements or challenges tied to a specific industry or the scale of an operation. At that level, managing risk becomes an ongoing discipline, not a one-time decision. At The Hartford, the focus is on helping businesses manage risk before it turns into something more disruptive. That means working with companies to identify where they're exposed, decide what matters most, and put practical standards in place so risk is managed as part of day-to-day operations. And when losses do happen, The Hartford can pair that risk control work with insurance coverage grounded in underwriting, risk engineering, and claims experience developed over time. Learn more at thehartford.com/risk mitigation.
Travel smarter, not harder, at America's Best Value Inn by Sonesta, with convenient locations from coast to coast and value pack comfort at every turn. It's a practical choice for road trips, quick getaways, and everyday travel that keeps things simple without sacrificing comfort. And when you're a Sonesta Travel Pass member, staying at America's Best Value Inn means earning points toward free nights, upgrades, and more every time you stay. Go to Sonesta.com to book your stay and unlock the best rates with Sonesta Travel Pass. Here today, roam tomorrow. Join now at Sonesta.com. Terms and conditions apply.
This is Bloomberg Daybreak Weekend, our global look at the top stories in the coming week from our Daybreak anchors all around the world. Straight ahead on the program, we look to Kevin Warsh's bid to be the next chair of the Federal Reserve, plus a preview of earnings from Tesla. I'm Nathan Hager in Washington.
I'm Caroline Hepker in London, where we're looking ahead to first quarter European earnings amidst broader headwinds.
I'm Doug Krisner, looking at how the war in Iran is impacting Japanese inflation.
That's all straight ahead on Bloomberg Daybreak Weekend. On Bloomberg 1130 New York, Bloomberg 99.1 Washington, D.C., Bloomberg 92.9 Boston, DAB Digital Radio London, Sirius XM 121, and around the world on BloombergRadio.com and the Bloomberg Business app.
Good day to you. I'm Nathan Hager. We begin today's program with the Federal Reserve. On Tuesday, former Fed Governor Kevin Warsh is set to testify before the Senate Banking Committee in his bid to succeed Jay Powell as chair of the world's most powerful central bank. For more on what to expect, we're joined by Stuart Paul, U.S. economist with Bloomberg Economics. Of course, Stuart, as you know, this hearing is coming amid the backdrop of ongoing investigations into the current Fed chair, Jay Powell, and Governor Lisa Cook. So what can we expect? Fireworks on Capitol Hill?
That's a pretty sure bet. I do expect to see fireworks during the Senate Banking Committee hearing this Tuesday. Not only are we likely to see some pushback from Democrats, but even one very important Republican on the committee, and that's Senator Thom Tillis from North Carolina, has expressed concerns about the DOJ probe into the Fed chipping away at the Fed's independence, and so he pledged to halt Kevin Warsh's advancement through the nomination process until the DOJ probe is resolved. So as much as we're going to see some pushback from Democrats, I think that this entire conversation about the DOJ probe and about the Fed's independence is going to be something that we hear from both sides of the aisle. And until the DOJ probe is resolved, the best bet is that the nomination just sort of stays in committee, stalling out. And that could last for several weeks, if not months at this point.
Well, if that were to play out that way, what would that mean for the Federal Reserve itself? Does it just go without a chair? Does Jay Powell stay on longer?
Yeah, so Chairman Powell has three important roles, really. The first is as chairman of the Federal Open Market Committee, which is the main monetary policy and interest rate setting organ of the Federal Reserve System. The second role that he has is as chairman of the Federal Reserve Board. And that's really what we're talking about, that role, when we talk about Kevin Warsh's nomination. and he's also a governor of the Federal Reserve System. And so in the event that Kevin Warsh is not confirmed or his confirmation is really delayed, Chairman Powell just stays in his role as all three, as a governor, as chairman of the board, and as chairman of the FOMC. In the event that we do see Kevin Warsh advance through the confirmation process, he will become chairman of the board, and it will be really up to current Chairman Powell to decide what he wants to do with his governorship and then what that means for the leadership of the Federal Open Markets Committee. So right now we're thinking about rather a narrow slice of Chairman Powell's responsibilities that are going to be sort of in flux. Until the next chairman of the board is confirmed, it's just mostly going to be the status quo, with Chairman Powell presiding over the board as a sort of pro tem or emeritus chair, and also Chairman Powell presiding over the FOMC, the interest rate setting body, effectively as a governor and as chairman of that body.
Now, of course, in the lead up to this hearing, Stuart, President Trump has talked about, testing that independence, possibly firing Chairman Powell if he doesn't leave the board, as he puts it, on time. Can the president do that?
I don't think that Chairman Powell is really subject to much risk of being fired by President Trump. President Trump has very little scope for removing Chairman Powell for cause, and that is what's required by statute. In fact, the DOJ probe into expenses at the Federal Reserve is basically an attempt to lay groundwork for removing him for cause. But it doesn't seem as though there's much of a path to pursue in that direction. And in the event that the DOJ probe continues, the Senate looks as though they would be very wary of advancing any successor Fed chairman's nomination through the process. So even if the president were to attempt to fire Chairman Powell, it seems as though any successor chairman would really face a lot of pushback in the Senate, which would limit the president's ability to lower interest rates, as he is currently expecting the next Fed chairman to do.
Yeah, I mean, that is really the pressure that the president has put not just on Chairman Powell, but arguably on Kevin Warsh here as he heads into this hearing. Now, if he does make it past the confirmation process, even after all these drama points that we've been talking about, will he even have the votes on the Fed Open Market Committee to deliver the cuts that the president wants?
Probably not. The committee is rather hawkish, especially this year, and there are a lot of committee members who are worried that the public is starting to raise their inflation expectations, and as inflation expectations become unanchored, so too does actual inflation. People expect prices to rise in the future, so they rush out and buy things today and beget the very inflation that they fear. The Fed is very focused right now on pushing back against rising inflation expectations. And so they're sending messages to the public, they're sending messages to markets that they want to keep their foot on the brakes. They do not want to swiftly cut rates as the president would prefer. So even if we do see a Chairman Warsh, which I think is a long shot in the near term, even if we were to see a Chairman Warsh, I think it would be very difficult for him to achieve the sort of interest rate cuts that the president wants right now.
Wow. All right. Well, thank you for this, Stuart. Great having you on with us. That's Stuart Paul, U.S. economist at Bloomberg Economics. Let's take a look now at some stocks making news in the week ahead. I'm Nathan Hager, joined by Bloomberg News senior equities reporter Bailey Lipschultz as the earnings parade continues, moving from banks to tech, really, in the coming week. Bailey, we hear from Tesla on Wednesday. We've heard a lot from Tesla already, the disappointment in the delivery numbers. I think I saw a story that a bunch of the Cybertrucks that have been sold already have been bought by SpaceX. What does that mean for Tesla this week?
Well, the big thing to keep in mind, that was a fascinating story from Dana Hull.
Yeah.
To your point, which kind of called out that the majority of these Cybertrucks are really being not only bought by SpaceX, but other companies. I think she also called out the Boring Company and Neuralink. So Musk Inc. continuing to evolve. But the big thing to keep in mind when we do get earnings from Tesla is the fact that, at least according to the sell side and most bulls, this is no longer really a car company. This is a robotics company. This is a driverless technology company. So the big thing will be any updates on the state of robotaxi, any updates on Optimus, because if you think about it, for a while, Tesla auto sales have been declining. And as much as we want to call out the fact that the stock right now is down more than 10% year to date, it's still a company that's driven by one man and one man only, and that's Elon Musk and his vision for grand plans. So any updates and commentary that can kind of allay any of the uncertainty over the costs to build out some of their technologies will certainly be top of mind.
Well, we do know that on Thursday, Intel is going to be reporting earnings as well. This company's in the middle of a turnaround. It's in the middle of a lot of investment as well from the government and other sources. So what can we expect from their earnings?
Yeah, it'll be a key story. And Intel, ironically, is a partner with Terafab. So something sticking kind of on theme. This has been one of the big winners so far this year. You're looking at a stock price, at least right now, up more than 80%. And the big topic of discussion with the results and with any kind of commentary from management, as you mentioned, will be on that recovery, on that turnaround story. How much demand are they seeing for server CPUs? Are they seeing any type of issues or knock-on effects from supply chain and pricing? Obviously, we've been kind of tracking what the fallout is for PC demands and over on the memory side of things as it relates to the SanDisk or a Micron. So that'll be certainly something top of mind. And obviously, the big question will still be on what do margins look like? What do shipments look like? But this has been a pretty much red hot stock so far this year, and if you really look at it on a 18-month basis as well, pretty sharp return.
Yeah, to your point, Bailey, the stock is up double digits and then some so far this year. So what kind of volatility could we expect around the earnings given the outperformance that it's been seeing so far?
Yeah, that'll obviously be a big question for the investment community, as we call it on the desk, price to perfection potentially. This is the company that when we look at what the options are implying, that move would be more than 9%. So that would be a pretty sharp move in either direction. And when you keep in mind, this is a company that has been volatile after earnings. If you go back to the start of 2024, there have been 26% declines, 12% declines, 17% declines, a lot of red on the screen on earnings days. Again, the big thing to keep in mind, this is a turnaround story, but I certainly think that if you polled investors in this company, what we can see typically is when a company has a move like Intel has over the last few weeks and months, is that the sell side expectation, so whether we call it a meet or a beat, is not quite what the whisper number, what the buy side investors are looking for. So that can lead to initial headline beats that we see stocks move in the other direction. And then we kind of have to unpack, well, sure, the analysts at the likes of a Morgan Stanley or Wells Fargo or what have you penciled in this for the estimates, but the investors who have been piling into the stock were actually expecting a market increase. So certainly something to keep in mind in the immediate aftermath, and certainly what it could mean for the longer term in terms of competition.
And along with Intel on Thursday, we're going to get results from American Express as well. Maybe a little more color on the consumer after what we heard from the big banks this past week.
Yeah, it'll be interesting to see what they say. Obviously, we've kind of talked ad nauseum across the newsroom about the divide and bifurcation of the credit card market. When you look at American Express, certainly catering to either a more kind of income-oriented consumer or simply people who want to have the platinum cards and are willing to pay the hefty annual fee for some of those perks. One of the things that has been interestingly flagged across some of the analyst notes and even with news that they recently struck a deal to acquire a company called HyperCard is this push potentially into AI expense management, AI offerings. They earlier this month introduced their Amex Agentic Commerce Developer Kit. So really trying to focus on how they can kind of thread that needle of being a payments company, being a credit card company, and also cutting costs and powering growth from the commerce side of things, utilizing things like AI. Obviously, that was such a big buzzword for the last year and really few years. So certainly seeing how the company can lean on some of those AI tools and what that ultimately could mean for the bottom line.
Thank you for this, Bailey. Great having you on with us. That's Bailey Lipschultz, Senior Equities Reporter for Bloomberg News. And coming up on Bloomberg Daybreak Weekend, we'll look to first quarter European earnings amidst broader headwinds. I'm Nathan Hager, and this is Bloomberg.
Everyone has been there. Your team's feedback is scattered across emails, chats, and sticky notes. It's a mess. But PDF Spaces in Adobe Acrobat gives you one collaborative workspace to streamline every file and comment. So, if you need 6 departments to finally agree on a proposal, do that with Acrobat. Need to turn a mountain of feedback into one plan of action? Do that with Acrobat. Want to stop searching for files and finally get everyone on the same page? Do that with Acrobat. Learn more at adobe.com/do-that-with-Acrobat.
So there's a lot of noise about AI, but time's too tight for more promises. So let's talk about results. At IBM, we work with our employees to integrate technology right into the systems they need. Now, a global workforce of 300,000 can use AI to field their HR questions, resolving 94% of common questions. Not noise, proof of how we can help companies get smarter by putting AI where it actually pays off, deep in the work that moves the business. Let's create smarter business. IBM.
Support for the show comes from Public. Public is an investing platform that offers access to stocks, options, bonds, and crypto. And they've also integrated AI with tools that can assist investors in building customized portfolios. One of these tools is called Generated Assets. It allows you to turn your ideas into investable indexes. So let's say you're interested in something specific, like biotech companies with high R&D spend, small cap stocks with improving operating margins, or the S&P 500 minus high debt companies. Chances are there isn't an ETF that fits your exact criteria. But on Public, you just type in a prompt and their AI screens thousands of stocks and builds a one-of-a-kind index. You can even backtest it against the S&P 500. Then you can invest in a few clicks. Go to public.com/market and earn an uncapped 1% bonus when you transfer your portfolio. That's public.com/market.
Ad paid for by Public Holdings. Brokerage services by Public Investing. Member FINRA SIPC. Advisory services by Public Advisors. SEC registered advisor. Crypto services by Zero Hash. Sample prompts are for illustrative purposes only, not investment advice. All investing involves risk of loss. See complete disclosures at public.com/disclosures.
This is Bloomberg Daybreak Weekend, our global look ahead at the top stories for investors in the coming week. I'm Nathan Hager in Washington. Up later in our program, we'll look at how the war in Iran has affected inflation in Japan. But first, in the coming days, Europe's biggest companies share details about their recent performance with the market. The disclosures come at a pivotal time as war and inflation threaten to undermine the profit outlook for 2026. For more, let's go to London and bring in Bloomberg Daybreak Europe anchor Caroline Hepker.
Nathan, the war in Iran is a key topic for public and private companies operating across a broad range of sectors. For one, it is pushing up inflation. The latest data for the Eurozone shows headline inflation rose by 2.6% year on year in March. That was more than economists had expected. It's up from 1.9% in February, driven by pump prices. But uncertainty around the path of energy prices also does remain extremely high. As companies prepare to report first quarter earnings in Europe, there may well be other themes that emerge on consumer sentiment, AI disruption, and concerns about excesses in private credit. Despite recent volatility in markets, the CEO of the London Stock Exchange, Julia Hoggart, has told Bloomberg she's optimistic about prospects here in the UK.
Look, the simple reality is we have the biggest pipeline we've had since 2005. So this reform agenda is bearing fruit. Our lawyers and our bankers are very busy right now in preparing transactions. And those transactions are coming in not just from the UK, but around the world. But there is always more you can do. You have to think of the exchange product in the same way that any company thinks of any product. Does it serve the needs of its clients? And so a lot of what we're focused on right now is we've had massive reform to enhance retail participation in the UK. Because actually there were quite a lot of European regulations that made it quite hard for retail to access regulated markets, unlike here. And therefore we have reversed those in the UK, and now we're working on the culture and engagement campaigns in the UK for retail to increase their participation, and for our pension funds as well to increase their participation, not only with public companies but with private companies. And that is where the majority of the focus is, because the reform agenda has been so swift and so profound in the UK that most of our checklist we've actually checked off.
That was the London Stock Exchange CEO Julia Hoggart. So how are firms navigating the current environment, and which earnings stories should we be looking at in the coming days? Joining me now is Bloomberg's senior strategist for equity markets, Michael Masika, and our private equity reporter, Sweta Gopinath. Welcome to both of you. Michael, I want to start with you thinking about the public markets and whether there's any evidence that the Middle East tensions are already affecting performance.
Well, it is already starting to impact companies, especially in Europe, and especially in the consumer sector. We had earnings report from luxury companies LVMH, Hermès, as well as a beverage company Pernod Ricard. The three of them had very underwhelming results, and most of it was blamed on the war. For luxury companies, it's a tricky one. Those companies, they don't have a very big customer base in there. Like in terms of sales, it's between 5 and 10%, depending on the companies. Richemont is the one with the highest one, with about 10%. But those customers are very affluent and they travel a lot. And they buy luxury goods everywhere in the world when they travel, which they haven't been able to. So the reality for those companies is we've been waiting for a recovery in the luxury sector and the consumer sector for a while now. And that recovery is becoming completely elusive.
Okay, so that important sector then in Europe looking a little bit tricky. What are the big names then we should be looking out for in the next few days that are going to report that we can think about?
So loads of consumer stocks are going to come, but I will talk about one specific sector which is different, is the tech sector. The reason is that next week we have SAP. SAP, one of the biggest companies in Europe, and in the software and services sector, a sector that was massively impacted by AI potential disruption. I say potential because at the moment we don't see any evidence of that disruption. But the sector was battered. The whole sector was battered in the US and in Europe, and SAP in particular. So it will be interesting to see what they are going to say and what will be their forward guidance.
I did see a story that you put out a few days ago that was looking overall at European businesses, that actually there is a view that analysts are still being much too optimistic about the earnings potential of European businesses for the whole of this year. I mean, things are very uncertain, though, aren't they? So how do you think about that?
That's right. So you have like very lofty expectations, but that's valid for pretty much the whole world. I mean, in the US, we're talking 15% earning growth this year. In Europe, it's double digit as well, like 10, 11%. These earning expectations were set up like at the end of last year, kind of, and they haven't come down. They haven't come down because analysts still expect fiscal stimulus in Europe to kick in like aggressively this year. They expect growth to improve. But the problem is the war is changing all that. I mean, first of all, you have input costs that are rising. Second, interest rates might be rising as well. Growth might be impacted. Already we're seeing like economic surprises in Europe plunging into negative territory. And on top of that, the stimulus is coming, yes, or has started already. But if governments need to start, reallocating resources to different areas because of the war and because oil prices are now $100 a barrel, that's going to delay all of that. So earnings growth might be like also very, very high. The expectations might be very high, too high.
Too high, yeah. Yeah, indeed. We've seen some European countries already, trying to offer some help for consumers and businesses. Outside of the war, what do you think is the biggest macro risk facing companies?
So interest rates is a big one. I mean, we came from last year expecting a European Central Bank on hold, a Fed that was going to reduce rate at least 3 or 4 times this year. Same for the Bank of England. And now we have completely flipped. The Fed is likely to stay on hold or cut once. The ECB is likely to raise interest rates 2 to 3 times, and the BOE as well. I mean, you've seen in England especially, rates are already very high. So it's going to impact boring for the government. It's going to impact companies, how to finance their growth and their activity, and that's a big risk for the market.
Okay, that's interesting. Yeah, absolutely, Michael. Thank you for those thoughts on the public companies that we're expecting to report in the next few days. I don't think we can really have a conversation, though, about first quarter results, the impact of the war, of inflation, the worries that investors have, without also thinking about private markets that have had also a very interesting, I'll put it that way, first quarter. You had more private credit withdrawal limits. You've also got a bit more concern about private markets that central banks are raising. So, Sweta, I want to bring you in now on this. Just talk us through some of the big factors that private markets and investors have been thinking about in the last few months.
Yeah, it's been an interesting period of time indeed. It's all really down to the debate about the impact of SaaS, the impact of AI on SaaS, the SaaS apocalypse that you referenced earlier. Private capital firms piled into software firms during the COVID deal-making boom, and many of those companies are now being disrupted by AI, or at least are at the threat of being disrupted by AI. And we've seen the AI-related sell-off in public markets extend to the listed private capital firms, and a number of them, the likes of Blue Owl especially, are also having to drop gates on vehicles catering to retail investors in particular, because as you say, a lot of them are scrambling to exit. And more broadly, the increased volatility we've seen in public markets also means it's that much more difficult to exit assets now. It's that much more difficult to sell and monetize assets, which is a big problem for an industry that's facing pressure from investors to return cash back.
Do you think that there are particular sectors? I mean, you've mentioned, SaaS companies that are in focus, but are there particular sectors that are seeing a special sort of stress? Because a lot of the issues with private credit, they've been individual red flags, and everybody's been wondering, is it more systemic? Is it isolated to some companies and sectors?
Tech, more broadly, is the most disrupted sector right now, as you were saying. Horizontal software companies in particular, the sort of buy and bulk up model that private equity chased essentially means that you have these sprawling software companies that have a number of sort of disparate services that they offer to customers in one sort of bulky package. And a lot of these clients are now pushing back against those type of packages because they can cut costs by turning to cheaper AI solutions. So horizontal software, that's most at risk. Professional services, which is again one of the more attractive sectors for private capital, that's also at risk. Essentially, any kind of knowledge work that can be replaced by AI is at risk. And that was a very attractive sector for private capital in recent years.
And do you think that there is a specific impact on private markets from what's been happening in the Middle East? I mean, obviously, inflation and interest rates.
So far, we haven't really seen private companies turn away from the Middle East, essentially because they rely on the region's sovereign wealth funds for a lot of their funding. Bain Capital just this week announced a new office in Abu Dhabi. It's actually their first in the region. And we've also seen several deals come through. We've seen Blackstone deploy into the region. They've inked a couple of deals recently. They announced an aircraft leasing venture with a Dubai firm this month. They also committed about $250 million to a new payments infrastructure platform based in Abu Dhabi. And we've seen large Middle Eastern investors actually continue to deploy money externally. An Abu Dhabi Royal investment firm invested in Richard Kering's hospitality business, which is, Annabelle's, the private club in Mayfair. It's also the Ivy chain of restaurants. So we are seeing them make the kind of splashy investments abroad that they used to pre-war.
That's interesting to understand that. Yeah, given that GCC investors have been so crucial, underpinning big investments in US tech and banks and taking stakes in businesses. Really interesting point. Sweta, thank you so much for being with me. That is Sweta Gopinath, our private equity reporter, alongside Bloomberg's senior strategist for equity markets, Michael Masika, setting you up for the week ahead when it comes to European earnings. And we will, of course, have full coverage and all the announcements on Bloomberg platforms as earnings season kicks off in the next few days. I'm Caroline Hepker here in London. You can catch us every weekday morning for Bloomberg Daybreak Europe beginning at 6 a.m. in London. That's 1 a.m. on Wall Street. Nathan.
Thanks, Caroline. And coming up on Bloomberg Daybreak Weekend, we'll look at how the war in Iran has affected Japanese inflation. I'm Nathan Hager, and this is Bloomberg.
Hey, wouldn't it be great if life came with a remote control? You know, you could hit pause when you needed to, or hit rewind, like that time you knocked down that wasp's nest. Uh-oh. Well, life doesn't always give you time to change the outcome, but prediabetes does. With early diagnosis and a few healthy changes, you can stop prediabetes before it leads to type 2 diabetes. To learn your risk, take the 1-minute test today at doihaveprediabetes.org. Brought to you by the Ad Council and its prediabetes awareness partners.
Everyone has been there. Your team's feedback is scattered across emails, chats, and sticky notes. It's a mess. But PDF Spaces and Adobe Acrobat gives you one collaborative workspace to streamline every file and comment. So, if you need 6 departments to finally agree on a proposal, do that with Acrobat. Need to turn a mountain of feedback into one plan of action? Do that with Acrobat. Want to stop searching for files and finally get everyone on the same page? Do that, do that, do that with Acrobat. Learn more at adobe.com/do that with Acrobat.
So there's a lot of noise about AI, but time's too tight for more promises. So let's talk about results. At IBM, we work with our employees to integrate technology right into the systems they need. Now, a global workforce of 300,000 can use AI to field their HR questions, resolving 94% of common questions. Not noise, proof of how we can help companies get smarter by putting AI where it actually pays off, deep in the work that moves the business. Let's create smarter business. IBM.
Support for the show comes from Public. Lately, it feels like there are 2 types of investing platforms. Some are traditional brokerages that haven't changed much in decades, and others feel less like investing and more like a game. Public is positioned differently. It's an investing platform for people who are serious about building their wealth. On Public, you can build a portfolio of stocks, options, bonds, crypto without all the bugs or the confetti. Retirement accounts? Yep. High yield cash? Yes again. They even have direct indexing. Public has modern design, powerful tools, and customer support that actually helps. Go to public.com/market and earn an uncapped 1% bonus when you transfer your portfolio. That's public.com/market.
Ad paid for by Public Holdings. Brokerage services by Public Investing. Member FINRA SIPC. Advisory services by Public Advisors. SEC registered advisor. Crypto services by Zero Hash. All investing involves risk of loss. See complete disclosures at public.com/disclosures.
I'm Nathan Hager in Washington with your global look ahead at the top stories for investors in the coming week, when we'll get insights on how the war in Iran has affected Japanese inflation. Let's get to Bloomberg's Doug Krisner, host of the Daybreak Asia podcast.
Thanks, Nathan. Not only will those higher oil prices likely increase Japanese inflation, but a weaker yen is pushing import prices for other goods higher. So the question now is whether markets will be surprised at all by the March readings on Japan's CPI and PPI. For a closer look, I'm joined by Bloomberg's Brian Fowler. Brian is senior editor for the EcoGov team covering North Asia, and Brian joins us from our studios in Tokyo. Thank you for being here. Give me a sense of what the market is expecting to see in these inflation readings, Brian.
Yeah, so Doug, just a little bit of background. So these data, which come out 4 days ahead of the next BOJ policy decision, will be hugely watched. We saw them in February. The main gauge, which excludes fresh food, but includes energy, that main gauge fell to 1.6% in February, and that was slower than the BOJ's target for the first time in almost 4 years, largely because of subsidies meant to cap utility costs. Now the market expects to see a big spike in March because, of course, the energy prices and the oil price hikes that we've seen since the escalation of the Middle East conflict are going to have a big impact. So we definitely will see inflation picking up in March. And the question will be, is that enough to tilt the BOJ towards a hike?
So, Brian, I want to pick your brain a little bit more about the BOJ and its thinking. But before I do, I have to ask about that print on Tokyo CPI. I know that it's used sometimes as a leading indicator of what we're likely to see in the national CPI reading. And as I recall, that Tokyo CPI print was cooler than expected. Was that sort of an aberration? What do you think?
Yeah, so it is a leading indicator, although to some extent it gets a little bit distorted because of certain subsidies that are effective only in the capital and not nationwide. So it's a little bit of a guidepost, but I wouldn't say it's a direct correlation. And I think we probably will see a bigger impact on the national scale.
So as you mentioned, the BOJ meeting is at the end of the month. Obviously, we're going to have the rate decision. We'll also get an update on the quarterly economic outlook. I'm curious about what the BOJ is likely to do, not just in terms of inflation forecasting, but also where the BOJ thinks the Japanese economy is going to end up.
Yeah, so in terms of the forecast, we expect the BOJ to lift its inflation outlook for this year fairly sharply. We've spoken to officials off the record around the BOJ, and they've indicated that the CPI will get a boost. And growth also probably will get a downward revision. We don't have any specifics on that, except there's an expectation that the higher energy prices could weigh on consumption and investment to some extent.
So when I think about war in the Middle East and the closure of the Strait of Hormuz, it's not just the disruption of oil. There are other resources desperately needed by economies in the Asia Pacific. Obviously, these resources are not getting to their destinations, and that, I would think, is likely to have an inflationary impact as well.
Yeah, so we've already seen Japan's government take steps to try to secure supplies of other products that are related to oil, such as naphtha. And these products are critical in producing plastics and other things in across industries. So we could well see inflation kind of ripple throughout the economy. And I think that's a big concern at the BOJ.
So what about a rate hike? Is that a possibility?
Well, just a little bit of background. So Ueda, when he raised rates in July 2024, the next few days we saw a global market meltdown, and that had a lot to do with what was happening at the Fed. But many blamed the BOJ for spurring the turmoil with an unexpected move. So since then, Ueda has really stepped up his communications. Up until a few weeks ago, everything was pointing toward a hike at the end of this month. He was sending the usual sort of nuanced language, but it was very consistent. And you could see the reaction in the market. If you look at the Bloomberg terminal and do the WIRP function, World Interest Rate Probability, we were up to 70% priced in hike for April 28. We've seen that now come back quite sharply as Ueda has shifted his messaging just a little bit to emphasize all the uncertainty surrounding the Middle East conflict and how that's really showing no signs of clearing up. That makes it a little bit harder for him to hike because obviously the policymakers don't like to do a lot when they don't know what's coming ahead.
Do we have an indication as to how consumers are feeling? What's sentiment like right now?
Yeah, so I think consumers would like to see any sort of step that could help the yen, which of course would be a rate hike, and you know, in that sense mitigate the sort of inflationary impact we've seen from rising import costs. And so I think, you know, there's a lot of support at the local level for the BOJ to continue normalizing policy.
But hasn't there been a lot of positivity when it comes to the wage side?
Yeah, so the wage, we are getting the results for annual wage negotiations, and it's looking like they're going to be almost as high as they were last year. Last year we saw the biggest gains in more than 3 decades. This year, maybe a couple decimal points slower, but 5% for the main union group, Rengo, which is, you know, historically way higher than it's been up until a couple years ago. So that's looking like the momentum is holding.
So you mentioned the fact that the yen has been very weak, and I'm wondering, away from an actual rate hike, whether intervention in some form might be called for, or are we not at that point right now in overall yen weakness as it relates to the dollar?
Well, we're very much at the point where it's being talked about, it's being hinted at. We had Finance Minister Katayama in Washington meeting with Scott Bessent and kind of reaffirming their shared concern about the yen. And she came out of that talking about how she is poised to take, quote, bold steps, unquote. Bold steps, of course, are a reference to intervention. So there's definitely the threat of it. And I think the next time to look for it, especially, would be after the BOJ meeting, if the yen weakens substantially after that.
Brian, good stuff. Thank you so much for helping us set the stage for the Japanese inflation data and the next meeting of the BOJ. Brian Fowler is Bloomberg senior editor for the EcoGov team covering North Asia. Brian was in our studios in Tokyo. Now we go to Hong Kong, where the 3rd edition of the HSBC Global Investment Summit wrapped up in the last week. And that's where we caught up with HSBC CEO Georges El-Hedry. He spoke with Bloomberg TV host Yvonne Mann and David Ingles.
I have to kind of start off with your take on what's going on in the Middle East right now, given that you were born in Lebanon, you lived there for some time, you were once the head of the Middle East office there as well. From your perspective, what do you think that this impact of this war could have on the business?
Yvonne, of course, we're saddened and concerned with what's happening in the Middle East. And we're concerned not just with what's happened, but also with how long this will take. Our immediate priority really is to support our colleagues. We have more than 10,000 people working in the Middle East as a region, support their safety, security, and their well-being. And we've been doing that very actively over the last few weeks. But the important thing to say is we're open for business. We're here to support our customers. We've been, operationally resilient throughout that period, of course, following government guidance and requests, but we are open for business. We've been in this region for more than 130 years. This region has faced challenges in the past. After every challenge, this region has come out of it more resilient, stronger, and with bigger promise for the future. And this time is no different. We continue to believe in the long-term prospects and the promise that this region has. And we are here to support our clients through rough times, when there are rough times, be it those customers in the Middle East or those international customers operating in the Middle East. And we will see it through together.
As Yvonne was pointing out, I'll speak up a little bit because of the background here, where I think all your clients are in town, which it speaks volumes about the volume behind us. As someone who is very familiar with the region, and you've just reiterated your commitment to the Middle East, a lot of people are wondering, as a source of capital, as a wealth hub, these big cities like Dubai, for example, what the future holds for these cities as financial centers. Do people need to rethink that, or is there nothing to rethink?
There has been a global trend of diversification of booking centers that's been taking place for a number of years now, specifically by our wealth management customers.
Right.
So they've been using booking hubs such as Hong Kong, of course, such as Singapore, such as the UAE, both in Dubai and Abu Dhabi, such as Switzerland, the UK, the US. And they have naturally been diversifying their wealth to be managed across multiple of these hubs, partly to be able to benefit from the expertise that each market brings, and partly as a matter of risk management. That trend continues. Insofar that this is, this concerning the Middle East today, frankly, we have seen very benign movement. I think the resilience of the Middle East as a long-term hub for wealth management and capital has not changed. But of course, everybody's hoping to see the end of the current conflict and praying to see the end of the current conflict soon.
You're also a global trade bank, so what do you see in terms of change, if any, of trade flows? Do you see any of that since this war erupted? And how does it differ from maybe last year when we were talking about tariffs?
So trade has certainly been disrupted. Now, it's been tariffs of 2025 have disrupted trade with the US. This time we're seeing a major disruption in trade far beyond the Middle East, but in particular towards Asia because of the Strait of Hormuz closing. We believe there are multiple hundred, probably up to 800 ships that are still locked up in the Gulf. And, of course, the passage daily, 150 ships, has dropped to maybe 5 to 10 ships at best. So that is hugely disruptive. The impact of such will be felt way beyond the Middle East, and that is one worrying factor for us, not just in price of goods, oil, refined products, LNG, LPG, but also fertilizers, metals, etc. But it's also going to be felt in the availability of such goods. And we worry that a continuation of this conflict will have that impact globally, way beyond the Middle East.
That was HSBC CEO Georges Elhedry speaking with Bloomberg TV host Yvonne Mann and David Ingles from the sidelines of the HSBC Global Investment Summit. I'm Doug Krisner. You can catch us weekdays for the Daybreak Asia podcast. It's available wherever you get your podcast. Nathan?
Thanks, Doug. And that does it for this edition of Bloomberg Daybreak Weekend. Join us again Monday morning at 5 a.m. Wall Street time for the latest on markets overseas and the news you need to start your day. I'm Nathan Hager. Stay with us. Top stories and global business headlines are coming up right now.
If you follow markets, you know the value of long-term thinking. You plan, you diversify, you prepare for volatility. But in life, even the best strategies can't prevent every bad day. A fire, a loss, a disruption that demands immediate attention. When that happens, what matters isn't just what you planned, it's who shows up. That's where Cincinnati Insurance comes in. For more than 75 years, they've helped individuals and businesses navigate life's toughest moments with care, expertise, and personal attention. Together with independent agents, Cincinnati Insurance focuses on relationships, not transactions. Their approach is grounded in experience, follow-through, and trust built over time. Bad days happen, and when they do, you deserve an insurance partner who understands risk, respects what you've built, and is ready to help you move forward. The Cincinnati Insurance Companies. Let them make your bad day better. Find an independent agent at CINFIN.com.
Ryan Reynolds here from Mint Mobile with a message for everyone paying big wireless way too much. Please, for the love of everything good in this world, stop. With Mint, you can get premium wireless for just $15 a month. Of course, if you enjoy overpaying, no judgments, but that's weird. Okay, one judgment. Anyway, give it a try at mintmobile.com/switch.
Upfront payment of $45 for 3-month plan, equivalent to $15 per month required. Intro rate first 3 months only, then full price plan options available. Taxes and fees extra. See full terms at mintmobile.com.
Discover a spectacular island destination with crystal blue seas, endless sunshine, and the cool Bahamian breeze. Baha Mar, located in Nassau, Bahamas, offers your choice of 3 luxury hotels, over 45 fine dining and nightlife venues, John Baptiste's all-new jazz club, the Caribbean's most luxurious casino, and one-of-a-kind experiences for the entire family, like our 15-acre tropical water park, wildlife sanctuary, world-class golf course, and so much more. Visit bahamar.com today.